Okay guys, I wanted to make a video explaining how you could buy two houses, first one even being a duplex if you want. So let's call it 3 doors, conceptually without a down payment and negotiably without closing costs either. You would have some out-of-pocket costs, like paying for an inspection, we're talking probably under $1,000, paying for an appraisal, probably under $1,000. So maybe each house costs $2,000, let's say. So let's break this down. There's lots of clickbait on the internet. There's lots of, to find out, sign up for this class or pay me money. I'm avoiding all of that. I'm literally going to break this down line by line. Well, not, like general numbers. And I'll use specific examples from today's market. Okay. What inspired me to do this is we have 2 kids, first kid's in college now, not quite ready to buy a house, but maybe in a couple years. This would be a great way for him to accumulate real estate with very little to no money out of pocket. And we also have a second child still in high school, but will be in college soon. Also not ready to buy, but maybe in a couple years. So certainly been thinking about this, and this is a great way to get this done. Now, they don't have income, but as parents, we can co-sign as what's called non-occupant co-borrowers. So in this example, it could be, let's say, a child plus the parent. You're both on the mortgage, you're both on the house, and here's how the payment breaks down. Here's the timelines of everything, right? Because you have to do something in the first year, then you got to wait a year and do something second year. But by the end of year 2, you conceptually could have your 3 doors, 0 down. And this is for Washington State as an example. So here we go. Okay, first let's cover some basics, right? Because we're going to be layering in a lot of things to make this work. First off, when you buy a house, you typically need a down payment. As an example, we're going to go with an FHA loan, very common loan. You need 3.5% down, okay? Second thing you need money for is what's called closing costs. Buyers and sellers each have closing costs. I'm going to use round average numbers. I'm painting this picture with a very broad brush, guys, okay? So let's say on average, buyers' closing costs, roughly 3%, okay? That's the second thing you need money for. The third and final thing you need money for is what's called out-of-pocket costs. I mentioned this earlier. So generally, you're going to want to have an inspection. You're going to want to have an appraisal. These things add up typically in today's market, what I've seen, usually under $2,000. Okay, so in each of these examples, let's just budget roughly about $2,000 for each house. Some more basics. This house is going to be owner occupied. So for example, our kid will live in the house as his primary occupancy. That opens it up to government loans such as FHA, which require only a 3.5% down payment. If you were just buying an investment property, not occupying it, usually you're putting 20% down or more. Okay, so that's not what we're doing. Child's going to occupy it. We're going to co-sign, not occupy it, right? Non-occupant co-borrowers, 3.5% down. Okay, Greg, where are you coming up with 3.5% down? It's going to be your first question. This is step 1, okay? In Washington State, the Washington State Housing Finance Commission, I had to get that acronym right, will cover your down payment for you. The program's called Home Advantage. You have to make less than $215,000. So, you and the kid combined, $215,000. And I have a whole video on it describing how that works. Okay, so problem number 1, down payment, that's going to be covered for us by the state. Okay, next step. Yes, your kid is 18. That's the thing. They have to at least be 18 because they got to go on the mortgage, right? And you can't sign if you're a minor. Okay, so child's 18, but child doesn't have any credit, right? I have a video on that. That's step 2. Super easy to give your kid credit. Add them on one of your credit cards as an authorized user. Just pick a good card, okay? Not a bad card. So problem 2 is solved. They have credit. You already have credit. Let's move on to problem 3. Problem 3, income. Kid doesn't have income. That's okay. You can use parent income on the application. Even as a non-occupant co-borrower, kid, even as the primary borrower, doesn't need any income. So your income can make this happen. And we're also going to talk about in a minute how the rental income helps offset the payment as well. So problem 3 is solved 2 different ways. Use your income plus the rental income. We're going to go on to problem 4 next. I have a solution. Problem 4, closing costs. Now, closing costs can be negotiated. This is not a guaranteed, okay? You're going to have to negotiate with the seller. But in your offer, you're going to be working with a real estate agent, by the way. Don't try to do this all on your own kind of stuff, okay? Work with a good real estate agent. You need a referral. I certainly know a bunch. But in that offer, you're going to say, I'm going to buy your house and I need you to give me what I call seller credits. and that will cover your closing costs for you, right? The state's going to cover your down payment. The seller's going to cover your closing costs. You're just paying for an inspection and appraisal, okay? So having enough cash, assuming you got a couple grand to get through all this, that has been solved. Problem 5, you're going to say, hey, Greg, you got to be a first-time home buyer to get down payment assistance. And as a parent, I already own a home. I'm going to say, hey, that's no longer a thing. You no longer have to be a first-time home buyer to get down payment assistance with this program. In fact, you can do it multiple times. And we're going to cover that in a second as well. Problem 5, solved. Okay, now that we've knocked out let's call it the top 5 objections, you ready to get going? Let me show you how this works, okay? The state of Washington will again, is going to cover your down payment. And a year or two ago, they opened it up where you could also buy a duplex. It used to just be they would cover it for a single family. Now they'll also cover a duplex. And I've closed some of these, okay? So let's go looking for a duplex. And let's go see how much it costs. And let's run down some basic numbers, all using public information. I'm going to use like Redfin and Google and stuff that you can do this all on your own as well, okay? So let's see what we got. Okay, here's one for sale for $675,000, and it's in yes, for folks outside of the area, it's pronounced Puyallup. Okay, I'm going to use the built-in Redfin payment calculator. It's not the best, but I'm going to add some adjustments to make it a little better. So we're going to put 3.5% down because that's what's required. It says on the screen 4, but if you do the math, that's 3.5. The 30-year fixed, I had to get a rate. I'll show you where I got that in a second, where you can get it as well. And the property tax is already in there. The mortgage insurance I've also adjusted for FHA on here, which by the way is 0.55 per year. At any rate, you get a payment just over $5,000 a month, right? Like $5,100 and change. That homeowners insurance number, it might be a little higher. So let's just call it $5,200 a month, roughly. Okay, that's your payment. Let me show you where I got that rate from. Okay, the state for the down payment assistance program, they set the rate on the mortgage you're getting, right? And they set it the same for everyone. It doesn't matter your credit score, doesn't matter which lender you go through to get the loan. They set it every day. Here's the rate. Everyone in the state's going to get this rate for that day, okay? So on the date I checked, and again, you see up on the left here, Washington State Housing Finance Commission. That's the acronym for the website, right? WSHFC.org. And you can click on today's rates, and you can see for an FHA, for, again, 4% of assistance, you're going to need that because it needs 3.5 down, right? So you need 4% of assistance. The rate is 6.625. Okay, so that's a public rate anyone can get to, and that's the number that I plugged in to get that estimated payment for this example, okay? Okay, so back to the payment, right? We're thinking maybe around $5,200 a month for the payment. How much is this thing going to rent for, right? Well, each side is 3-bedroom, 1.5 bath. So let's go to another public website called rentometer.com. And this is their prediction, okay? They pull data and they average it. So you can see up here, they're averaging about $2,864 a month. So let's be a little conservative with that. Let's say $2,750 is what we might be able to get for rent for a 3-bedroom, 1.5 bath in this area, okay? Okay, but then you're saying, Greg, you can't rent it out. He needs to live in it as a primary occupant home. I'm gonna say, yeah, but remember this is a duplex. You're buying the whole building, which has 2 sides, right? So on one side, he'll live in, let's call it Unit A. And on the other side, we'll call it Unit B, he's renting out, right? So Unit B, you got the $2,750. Now, here's what I would suggest. This is like a true house hack. Let's say the kid lives in the master bedroom, right? Whatever. And it's a 3-bedroom. So there's 2 other bedrooms. You could rent out those bedrooms, right? He's got a college buddy, he's got a friend, whatever. They could get 1 bedroom in a shared kitchen, shared house, everything else for let's call it $750 a month. Okay. And you're gonna be like, well, Greg, there's no way someone's gonna pay $750 a month. That's not accurate. Well, I don't know. Let's go ask Google. Okay, so I just Googled average price for a 1-bedroom apartment in Puyallup, Washington. And through the magic of AI, it's predicting roughly about $1,500 for an apartment. Now, this is just 1 bedroom in a house. So if I'm saying about $750, that's half of what the going rate is, right? So, some friend might want to pay $750 so they don't have to pay twice that for an apartment. Okay, back to the income. You got $2,750 on the one side. You got $750 plus $750 on the other side. You add up all three. That's about $4,250 a month, right? And remember, our payment was somewhere about $1,000 over that, right? Somewhere around $5,200 a month. So, in theory, your kid could be paying $1,000 a month to live there. Now, he's going to pay $1,000 a month no matter where he lives, right? So why not put him in something like this? Now, when you do an owner-occupied loan, such as an FHA, part of the 100 pages of paperwork you sign, somewhere in there, it says you intend to occupy it for at least 1 year, okay? So he needs to move in and occupy this for 1 year. So on a timeline basis, that's year one, right? You're going to get in, having your down payment covered, your closing costs covered. He's in there, you're renting out, you're short only about $1,000 a month, okay? Okay, now let's say after 1 year, your kid says, hey, I want to move out of here and I want to buy my own place. I would suggest, this is what I would tell my kid, no, you need to wait 1 more year. First, we need to refinance this. Why do we need to refinance it? To get the down payment assistance off of there, okay? So right now, you have 2 liens on the house. Your first lien is the FHA mortgage at 96.5%. The other 3.5%, which is typically the down payment, is the down payment assistance. That's the second lien. So we need to refinance it just into a regular FHA loan, which then pays off the down payment assistance, which would then free it up for him to go buy another house and use down payment assistance again. You're going to say, oh, Greg, but you can't have 2 FHA loans at the same time. And I'm going to say, yeah, typically you can't. But I'm going to show you how this works, okay? First, let's break down how the refinance will work with some potential numbers. Okay, when you refinance, you don't need a down payment. You already own the house, right? But you have to show enough equity, right? So, for example, you need 3.5% equity instead of 3.5% down, okay? But if you recall, this is 100% finance. You didn't do 3.5% down. You did 3.5 second in addition to the 96.5% first, right? So now you need 100%, or you have 100% there you need to pay off in the refinance, okay? Also in a refinance, besides the payoff, you have to include closing costs on the refinance, which we're going to factor in here in a second. And once that's all said and done, you still need to leave a couple percentage points of equity. They won't let you finance up to 100% loan to value. With an FHA refinance, they let you go up to 97.75% of the value. See, so you need 2.25% cushion still in there. So we need to account for the payoff, the cost, and the 2.5% cushion. Okay, historically, what do homes do over time? They appreciate. They go up in value. How much do they go up? Now, no one has a crystal ball, but we have data we can go off of, right? So I just Googled, let's see, what did I type in here? What is the average appreciation in real estate in Washington State over the past 5 years, okay? Now, it gave me some crazy result, like 50%, but that's because it's including COVID. COVID's a one-off exception, right? Let's hope we never have another COVID. So I circled here, how about just in the last year? And it's 5%. And if you look over a long period of time, 5% is a pretty typical average number. So let's keep it easy. Let's assume this duplex you bought over 1 year has appreciated 5%. Okay, hopefully you're still following me, right? I know I'm talking a little fast. I apologize, but I'm trying to keep it moving so you're not just stringing you along. So if we bought the house at $675 and we add in 1 years of appreciation, so you times that by 1.05, right? You get approximately $708,000. So you're going to go to the bank. Call me. I can walk you through all this. If you want to refinance, I can help you with that as well. But you're going to say, hey, bank, I need an FHA. Well, they're going to have to order an appraisal to go out there. Let's say the appraiser comes back and says it's worth $708,000. Well, the maximum loan amount can be 97.75% of that $708,000. Okay, that math equals about $692,000. Okay, so that's the biggest loan you can get. Now, is $692 going to cover it? Well, remember, we need the payoff, the cost, and the cushion. So let's see how that breaks down. Okay, guys, let's see if we can make this work. Payoff is going to be the full amount, right? $675, because we didn't do a down payment going in. Costs, it could vary quite a bit. And I won't get into all the specifics. Let's do a round number, usually 2%, maybe 3%. So let's say roughly in terms of dollars, about $15,000. $675 plus 15, you're 690. We've already determined you can go up to 692, so the numbers work. Okay, now you got your kid living there for 1 year, right? He didn't pay any down payment to get into it, didn't pay closing costs to get into it. But there were closing costs during the refinance, but that's financed into the loan, not out of pocket, right? I mean, you could pay it out of pocket if you want, but you could just put it in the loan because we have equity to cover it, right? And the reason he did that is to pay off the down payment assistance. Now, at the time of refinance, you're also saying it's still your primary and you intend to occupy it for another 12 months. So he needs to stay there for 2 full years, because at the end of year 2, he can then move out and rent out the second side also for, let's say, $2,750, and now the entire payment is covered, right? After 2 years, full payment's covered. Maybe a little cash flow, depends on what you can actually get for rent. And now you and the kid own an investment property, a duplex, and you bought an investment property with 0 down. Now, he had to live there a couple years. He needs somewhere to live anyways, right? And now that he's moved out and you're renting out both sides and getting enough money to cover the rent, the renters are basically paying your mortgage payment for you every month. So they're paying down your mortgage while the property's building equity. In addition to that, we all know there's tax advantages when you own rental properties, right? Now, I got to give a disclosure. I am not an accountant, so go talk to a CPA. But it's fairly common knowledge. You can go on Google. I can tell you I see it in my profession all the time. People that own rental properties, they write off a lot of expenses. There's a lot of stuff you can do. So go talk to your accountant on that piece. But do you see how we got this property? You and the kid's name, 0 down, closing costs covered. Let's talk about the next house. Okay, kid wants to buy the next house. Maybe you co-sign. Maybe he's got a job now. Whatever the income piece looks like, it looks like, okay? His credit's already good because you helped him establish that to get the first one. Plus, he's been making house payments on time for the last 2 years, so his credit's really good, right? And you need down payment. Well, remember, we refied him, which paid off the down payment assistance, which means you can get down payment assistance again. You just can't have 2 down payment assistance loans out at the same time. The Housing Commission won't do that. You'll go to reserve it and say, no, you never paid back the first assistance. You got to pay that back before we give it to you again, okay? Now, then you're going to say, but Greg, you can't have 2 FHA loans at the same time. And I'm going to say, that's fine, because now with this excellent credit anyways, he's going to go do a conventional loan, okay? You can have a conventional first and still get down payment assistance to cover the 3% down needed for a conventional loan. Okay, kid finds a house he wants to live in by himself, requires 3% down, state of Washington covers it. Again, you ask the sellers to cover closing costs, and he bought that house with 0 down, 0 costs. Now, again, there's an inspection, maybe $1,000, an appraisal, maybe $1,000. Again, rough numbers. So he bought that second house technically somewhere around $2,000, right? But now he owns 3 doors, right? The duplex plus this one, all for 0 down in a 2-year period. Okay, but then you might say, hey, Greg, why stop at a duplex? Why not do a 3 or 4-plex? Because with FHA loans, you can go 1 to 4 unit. And I'm going to say, I hear you, but you're missing 2 important parts. 1, the Housing Commission won't give you down payment assistance on a 3 or 4 unit. But if you want to put them in a 4-plex and you cover the 3.5% down as a co-borrower, that's perfectly fine. Okay, that would work, right? And still ask for closing cost credits from the seller. But the second part also has to work. And this is the part a lot of people miss, myself included when I first got in the industry. I have yet another video talking about the self-sufficiency test. With FHA, not on 1 and not on 2 units, but on FHA with 3 and 4 units, it has to pass the self-sufficiency test. And with the prices where they are for 3 and 4-plexes, it's very hard in the market I serve, but I'm sure there's lower price markets where it might work, where it's going to pass. And then you're going to say, but Greg, I really want to put him into a 4-plex so he can live in 1. We rent out the other 3. He lives there for a year and then he can move out, right? That way you're just doing minimum down. What if I go conventional? I'm going to say, okay, that might work, all right? Again, you cannot get down payment assistance, but conventional does not have a self-sufficiency test. And And I have another video, but they recently lowered it to now you only need 5% down to get into a fourplex, right? But, you know, you're going to buy a fourplex that costs $1 million. You're putting about 50 grand down. So yeah, you could buy a fourplex for 50 grand. That's cool, but it's not the 0 down to get 3 doors kind of thing, right? So it just depends on how much money you have to spend. Okay, guys, let me know if that makes sense. I'll give you an update in the future in a few years when my kids are ready to buy, but that's the path I'm going to send them down. If you have any questions at all, it's always free. I'll break it down for you. I'm not going to charge you anything. I'm not going to throw a bunch of numbers that don't exist or rates that aren't real or none of this, elusive stuff to send you down a path that'll never finish. Okay, this is actual stuff, actual steps that will work and will come together. So at any rate, hopefully you enjoyed it. Hopefully I didn't talk too long or too fast. I'm not super big on graphics. I had someone else say my videos are really good, but my transitions suck. I would agree with that. I'm not a video guy, okay? I'm a mortgage guy. You want to buy properties, you want to invest in real estate, you want to put first-time home buyers in homes. That's what I do. And I do what I can on the videos. So let's go buy a home this year, guys. Cheers. But wait, there's more. One last tidbit I wanted to throw in there. If you are a veteran or even an active serving military member, VA loans allow 1 to 4 unit, 0 down, right? So you could do this as a fourplex, 0 down, and you can have more than one VA loan at a time. So potentially you could move out and then buy your own single family residence. And depending on county at that point and price, you could have very little to no down again on your second VA loan. So lots of ways to do this, guys. Fun fact, in my 15 plus, you can tell by my hairline, I've been doing this a while, my favorite loan I've ever done was a VA fourplex, 0 down. Seller gave $50,000 in credits, covered everything, including a rate buy down. An amazing loan product and an amazing opportunity. Let's chat.